big question for you. Is Zipcar in reverse gear? Rolfe Winkler joins us now on the set to tell us, are they driving backwards?
Today they are, clearly. Stock's getting hammered.
Stock's getting hammered, and why? It's got the reverse lights on, and it's going to be...
I think specifically just the bad guidance. Their first quarter guidance isn't what people thought it was going to be. So, it's an excuse to hit the stock. And
they've also been investing heavily in overseas.
Yeah, that's the trick. That's the hard part for this company.
Capital investment, though. That's a good thing, isn't it? Capital investment.
It is. The problem with capital, if it gives you a return,
if
it gives you a return, sure.
But you don't know that until you've made it, do you? You have to make the investment.
Risk. The hard part for Zipcar's business model, and the way they try to sell to investors the fact that in their established markets, which is 4 of their markets, where they've been for many years, they get a nice profit margin. So the fact that they're investing in Europe, and I think they're in 15 markets now, not to mention over 200 college campuses, the fact that they're investing in all those other markets will eventually pay off. The tricky thing, of course, is you can't have a car sharing service until you have cars. So you actually have to get a fleet, put that fleet in the market, and then hope customers show up, right? It's chicken egg. So they're investing in that, and the problem is the payoff is going to take a long time. It takes a while for these markets to develop.
Is part of this how you do, and I hate to get very pointy-headed on this, how you depreciate the fleet, right? Because there are many different ways of depreciating these assets, and I know it gets very pointy-headed, but that can have a huge impact when you're talking about fast depreciating assets like motor cars.
Well, I think it's an issue. I think the bigger issue for the shares, for investors, is just the huge valuation relative to the growth rate. I think that's something that they're going to be dealing with for a while. This has been referred to by Wall Street analysts as a high growth company. Yeah. It's growing 20% year over year. Okay. That's respectable. That's growth. But I don't think of it as high growth. Yeah. Apple grew 70% year over year. I mean, and sure, their earnings are growing more quickly.
A year-long chart there, and
their earnings are growing more quickly, but it's going to take a while, again, for that payoff. They're trading at 100 times this year's expected earnings and 39 times 2013 expected earnings.
I was going to say that, the thing about Zipcar that always puzzled me, and I've been a customer of Zipcar in New York City. It's a great service. I used it a lot for a time before I bought a car, but it seems that one of the challenges is that it's very dependent on the individual car markets because, as you probably know, in New York, it's very expensive to rent a car in New York City. But when you go to San Francisco, it's really cheap to rent a car in San Francisco. And so it's hard for me to see how far they can grow this company because, once you get outside of the really crowded urban areas where car rental is expensive, I don't know if the margin is there.
There is a limited market opportunity because, if, for instance, in the United States, there are only a few cities that are densely populated enough and folks don't have cars of their own, where it makes sense to have a car sharing service for things like the weekend when these cars are particularly popular. There aren't a lot of markets like that. Now, that's one reason they're going into Europe. They've spent a lot more time investing in Europe, in London. Now they're going to Barcelona.
But the issue with Europe is that they actually have reasonable public transport in many large European cities, which people rely on have relied on for a very long time, right? So when you have that, you're competing
potentially. One thing's for sure, it's going to take a long time. These markets aren't going to develop quickly for them, and investors hoping for a quick payoff aren't going to get it.